Bitcoin is currently falling, and this week could get really turbulent and volatile. And we can expect many surprises ahead. We look at why. But you shouldn't let yourself get rattled here, because the strong hands like MicroStrategy, Semler, and Scientific are buying the dip right now. And this is really important right now, that you're making the right moves here, because we have a lot of uncertainty in the market. On one hand, we have Donald Trump's inauguration, so the swearing in, which leads to a lot of uncertainty. We don't know if a Bitcoin strategy reserve is coming or not, or if Biden might sell off the US Bitcoin before the inauguration. Now, there are already people saying that Bitcoin has crashed here because, for example, the US sold off their Bitcoin. But that's not true. The Bitcoins are definitely still there. You don't need to worry about that. We also have the next Fed meeting coming up. And in the end, the market is also on edge here. How is this all going to turn out? We have important data again this week that will be released for the Fed. There's a lot of uncertainty here, whether less liquidity might be pumped into the market, as many expected. Then we have an interesting development with the bonds, or rather, with the US dollar. The US dollar is just really strong right now, and other currencies are massively depreciating against it. This is also causing a lot of investors to feel the pressure and possibly have to sell off their assets. We'll take a look at that too. In addition, there are the forest fires or the fires in L.A., where the first people are already calling for bailout packages. That adds even more uncertainty to the market. That means we have a whole lot of uncertainty, and there are so many points that we really need to pay attention to right now, because there are really some things that you need to pay very close attention to right now. So first of all, you have to say that not much has happened yet. We're going to take a look at the events right away. That could lead to more turbulence. But we also have a lot of buyers here, and that's always something you need to stay cool about. So the strong hands are the ones who buy these dips, while the weak hands get shaken out by the fear. Most of the time, the fear and all the turbulence are basically around the events, bigger than the actual event that happens. So then there are some rumors. The US is selling Bitcoin now, and then everyone panics, and then everyone starts selling. But the actual event often doesn't happen at all, or the actual event isn't that bad. And the news surrounding the event is way worse than the actual event. You always have to keep that in mind. On top of that, there have been liquidations again. When the Bitcoin price crashes by about 4 or 5%, there's usually liquidation. So the long guys, those who, for example, are using leverage to bet on rising prices, they end up getting liquidated. That usually happens here, so yeah, that wasn't really, that wasn't even a real crash. We're just seeing a pullback, a correction, a healthy correction that happens from time to time in a bull market. That doesn't mean that the bull market is over just yet. But we see here MicroStrategy bought another 2,500. Bought Bitcoin. They didn't actually buy it today, but probably a while ago. I don't know, like 2 or 3 days ago or something. So that's already in the past. So you can't really say that they bought the dip here. But MicroStrategy, they really don't care. They just keep buying. When the price is high, they get criticized. When the price is low, they get criticized again. So they just keep buying coolly. It doesn't matter if anyone criticizes here. Yeah. Bitcoin is crashing now or whatever. Or if it doesn't crash, then they say again, bought Bitcoin at all-time high. So they just keep buying it coolly. Then we have Semler Scientific, who also bought 237 Bitcoin. And so there are a lot of people who are using this as an opportunity. And now we have some exciting things happening here. And until the Fed meeting in January, there are still 18 days left. This week, the final CPI and PPI inflation data will be released ahead of the Fed's next decision. And that's really the key point. As long as certain data isn't in yet, as long as we don't know the interest rate decisions, as long as we don't know what Donald Trump is going to do with the inauguration, and as long as we don't have the inflation data and stuff like that, there tends to be a lot of volatility. As long as we do not know the interest rate decisions, as long as we do not know what Donald Trump is going to do with the inauguration, as long as we don't know the inflation data and things like that, there is often a lot of volatility. And a lot of investors are also pulling their capital out and will only put it back into the market once there's some certainty. It was the same during the Donald Trump election. Before the Donald Trump election, there was a lot of volatility. Speculation was rampant. Once the election was set, investors confidently entered the market. And only when the election was set, and when there was certainty, a lot of investors were ready to really pump in capital and go massively into the market. That's basically always the worst thing for markets. That doesn't necessarily mean that the bad news is really that bad. Of course, it depends on the extent to which it occurs. But the worst part is really the uncertainty. And the uncertainty is currently greater than ever, because we have so many events happening that are coming up and so many things, where things are generally uncertain right now, and we just have to wait and see for the next 10 to 20 days how this plays out. I mean, it could be that Donald Trump gets inaugurated here, is being introduced for the inauguration. And then he just goes for it. An executive order comes out. He drops a Bitcoin bill and says, hey, folks, we're buying like 300,000, 400,000, 500,000 Bitcoin. I mean, anything's possible. Could also be that nothing happens. Then there are, let's say, even bigger sell-offs because people are disappointed. We really have to assume that a lot of people are really already pricing in, at least in the Bitcoin community, that the Bitcoin reserve is coming, at least in the Bitcoin community. I mean, a lot of people see that critically. We'll just have to wait and see how that plays out. You can't really do any crystal ball gazing here. I mean, the chances aren't bad, but it's definitely not guaranteed that it happens right on the first day. But it could actually take several more days, or maybe it won't happen until next year. If not at Trump level, likely through states. Many proposals exist, most likely through the states. There are already a bunch of proposals out there. Texas and whatever other states there are. Pennsylvania and blah, blah, blah. I think there are about 5 or 6 states getting ready for a Bitcoin reserve. And then we have something else interesting, and that's a strong US dollar. The dollar index DXY has risen from 100 in September to 110, close to the peak of 113 from 2022. A strong dollar makes it especially difficult for foreigners to pay back dollar debts, which forces the sale of assets like stocks, bonds, Bitcoin, and gold. And that's something you really need to understand. That means many countries aren't in debt in their own currency, but are, for example, in debt in US dollars. And now the problem is if the currency, like the euro, depreciates against the US dollar. That basically means it's going to get harder for all the countries using the euro. For example, Germany, here to pay off the US dollar debts. That means you suddenly have to pay more for your debts than you might have before. This means that in the end, it is easiest to pay off the debt when you have a stronger currency. Then you just have those arbitrage opportunities that you can take advantage of here. The seigniorage opportunities you can take advantage of here. And that just doesn't happen when you have a weak currency. And what happens when you have to pay off debts? Of course, you might be able to refinance. Many do this, taking more debt. New debt pays old, risking hyperinflation. Let's just take on even more debt, and with the new debt, we can pay off the old debts. Because it basically devalues our currency, and then we simply drive this thing into hyperinflation. That would be the worst case scenario, but many would still be forced to sell assets to be able to pay off their debts, because they just can't, let's say, pay them off from their ongoing earnings or anything like that. Currency devaluing. So you have to invest in bonds here. You have to invest here. Bitcoin, you have to think of it like gold. You have to. Assets, stocks, whatever kind of assets you have, right? You have to sell off here. And it doesn't necessarily have to be a state. It could just be any investors. It could be investors and so on. So if you're in debt in dollars here, but for example, your cash flows are in another currency, or if you're traveling in Japan. If you're dealing with yen or something like that, and the yen is devaluing against the dollar, then that means investors might have to sell off their assets. And that's definitely going to happen. It's also happening to a certain extent right now. And a strong dollar has historically never been good for Bitcoin. Whenever the dollar is strong, Bitcoin is weak. Whenever the dollar is strong, Bitcoin is weak. And when Bitcoin is strong, the dollar is often weak. So we have a correlation here between a strong dollar and weak Bitcoin, and a strong Bitcoin and a weak dollar. It doesn't mean that Bitcoin can't keep rising with a strong dollar, but it does put a bit of a brake on things, like something that holds Bitcoin back. And as soon as liquidity comes back into the market, and maybe the dollar starts to devalue a bit and weakens a little, then it's very likely that Bitcoin will move forward again. Steckhotler actually wrote something very, very interesting about this, what's happening here right now, which is also extremely critical, specifically rising bond yields, despite interest rate cuts. So what we've seen is the Fed is lowering interest rates. We've already had 2 interest rate moves, one big one with 50 basis points, and then another one with 25 basis points, if I'm not mistaken. So we've seen 2 interest rate cuts. Still, interest rates are rising at the long end. And that means here, Steckhotler writes, normally long-term yields drop when the US Federal Reserve lowers interest rates. But right now, they're rising, which could indicate concerns about the US budget deficit, 125% here, and a lack of confidence in US bonds. It talks about the risks of a currency collapse, the rising yields and the falling value of some currencies. For example, the British pound could indicate a possible currency crisis, similar to emerging markets. So in the end, we have the opposite effect where the short-term rates are actually going down. At the long end, they're rising, and that naturally leads to further turbulence in the market. You don't see that very often. Usually, people want it to be managed by the Federal Reserve. Here, we always need to keep an eye on it, making sure that the interest rate spread isn't too wide. Now, the interest rate spread is widening, and that leads to even more uncertainty in the market, because that's just not a good sign for a stable market. There are a lot of question marks, like why is this happening, and why is the interest rate spread so large? Because the next thing to keep in mind here is rising yields reduce the value of bond portfolios, which could destabilize the banks. An uncontrolled situation could lead to a collapse. That means rising yields mean falling values of bonds, and when bonds are simply used as collateral, as base assets, from, for example, some banks, then at some point the banks are underwater. You've seen that happen before, where the interest rates were raised in the last high interest cycle, when suddenly the entire banking sector was underwater. And that brings more unrest to the market. And this could potentially put certain banks really under pressure. And then there's another really interesting development here. We actually have the fires in LA right now, so there's real chaos going on, and a lot of damage has been done. The damage is also way higher than what was originally expected. And that also leads to portfolios coming under pressure, because not only are bonds used as collateral for banks or something like that, but also real estate. And if there are massive, let's say, losses now, and these losses can't be covered by the insurance companies, then we're looking at a big problem, because there are just too many losses. Then, in the end, a big problem happens here. That means the collateral suddenly becomes worthless. If the collateral is worthless, then the bank's balance sheets are ultimately at risk. And that means we're going to see additional turbulence and more uncertainty in the market. There are already a lot of insurance companies that are really in free fall right now. And the insurance companies wanted to provide coverage for all the properties that are currently burning down. It says here in the COBRIC letter about insurance. However, it's estimated that it shouldn't exceed about 10 to 15 billion US dollars. That was the original plan. And now it's said that the estimated losses for the insurance companies have reached up to 20 billion US dollars. And it's also said that this whole situation might not be contained. And we also see that there are the biggest quasi here. Losses from wildfires have been around here since 2018, relatively speaking, almost twice as big as the last major crisis here. And now some people are already shouting that the losses here can't be covered from the insurance companies. What happens if they can't be covered? What happens then when the values in the banks are basically worthless? Are worthless, but that no insurance can cover it either. Then there are bailout packages. That means a lot of people are already shouting for bailout packages. We need new bailout packages. And on the other side, we have high interest rates at the long end. And what happens when we have high interest rates at the long end and can't get a handle on them? Then we also need bailout packages in the form of QE. That means we now have several situations where they might already be looking for bailouts. So that means, on one hand, to get a handle on the interest spread, and on the other hand, also to basically bail out the insurance companies here, because it's just so bad here. Let's just say there are massive damages, because then the banks will be the next to go down. So that means if there's no bailout here, then maybe the insurance companies will go first. Then the banks will be next. And when the banks go down, then there are ripple effects. And that's why we're actually seeing people here who are already actively talking about a bailout. Find it really hard to assess this. Like here, the situation with the wildfires is. But for sure, those are all the things that are happening in parallel right now. That means we have uncertainty from the Federal Reserve, we have uncertainty from Donald Trump. We have uncertainty from the rising strength of the dollar, we have uncertainty from the interest rate threat, we have uncertainty from the wildfires. We also have certain geopolitical uncertainties, although that's actually easing up a bit right now. But some are saying now, for example, that the risk of war is at an all-time high. In the next 7, 8, 9 days like never before, because now Biden might want to start a war. Or whatever, but those are conspiracy theories. I have no idea if that's true or not. I can't really assess that. Let me know if you're cool with it, if you're currently buying more. If you're buying more here, I definitely recommend checking out 21bit. Coin, the easiest way to buy Bitcoin in Europe. I'll put a link for you down below. It's really simple, straightforward. You can do it here with the code. Bitcoin, up to 20% off the fees when buying Bitcoin. You shouldn't let the uncertainty here drive you crazy. Some smart Bitcoin person once said, pullbacks are opportunities to redistribute money here, from weak hands to strong hands. And with that, I'll say goodbye. See you later. Peace out.